Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Roster at Victory Fiduciary, and today we're going to talk about just kind of the lingering effects of inflation and kind of what the Federal Reserve's next moves could possibly be. Inflation has really continued to be a sticking point in terms of handcuffing what Federal Reserve has been able to do regarding being able to become less aggressive with raising interest rates, which has really had kind of a whole effect across markets, and this is going back to last year, obviously. And so we've had some kind of conflicting inflation numbers kind of come across the board over the past couple weeks. So I just wanted to kind of break down a couple of those numbers, explain what they are, and kind of what their impacts can be. And so one thing that I think was interesting taking a look at this, when we look at the CPI trend, so CPI is finally, that's one of those inflation numbers that we've been tracking, certainly finally beginning to trend down after we reached our peak last year, but we're well above our trend line. I mean, significantly above our trend line. So a lot of work still needs to be done to be able to say that we've kind of won the war, so to speak, with inflation. So certainly seeing that begin to trend down, but I definitely still have concerns just kind of about how far above that trend line we continue to sit. Also, something else, when we look at different types of inflation measurements, one important inflation measurement is the core inflation rate. And so the core inflation rate is a measure of inflation taking out the cost of food and the cost of energy, which tend to be very volatile. And so, you know, we hear about, we've had good news in terms of inflation numbers that just came in month over month for the last month. But when we look at that core number here at 5.59, really has kind of continued to still be sticky, meaning that when you take out the price of food and energy, still we're really having a tough time. So the work that the Federal Reserve has done regarding interest rates has brought it down some, but not a whole lot. And so I think it means, you know, we're really gonna have to wait and see what the Federal Reserve, what their thoughts are on this, in terms of, are there going to be additional rate hikes necessary in order to keep bringing inflation down? Because when we look at the chart like this, hey, this number here, this looks really great, but when we take out some of those measurements and come into the core measurement, that purple line there, my hair keeps hitting on the screen here, that really looks a little less encouraging. And so just again, I think something to keep in mind is investors, you know, we hear, great, we have great positive inflation numbers coming in. This must mean that it's almost time for the Federal Reserve to become more dovish, kind of be able to back down, maybe even begin to lower interest rates. And I would kind of caution to say probably not so fast, because some of these numbers kind of look better on paper until we start to dive into them. Inflation is still a sticking point, and I think that it's going to be here for a little while longer. Now, something else here that's interesting, looking into what have investors in the market priced in terms of interest rate hikes. That's really all that this chart here is showing. And so only 16% think that we have completely kind of completed what the Federal Reserve is going to do in terms of basis point hikes. 83% think that there's at least another 25 basis point hike coming down the pike in terms of as a result of inflation. And so I thought that was really interesting numbers. So this is kind of what markets are pricing in, that we're not quite done yet, that there's more work to be done, and that the Federal Reserve probably doesn't have a choice but to raise rates again. And again, as a reminder, anytime we raise interest rates, we make it more expensive to borrow money. We make it more expensive for small, mid-sized, and large businesses. Their bottom lines get crunched a little more because everything just costs a little more in order for them to do their regular business. And so inflation really has widespread effects. If you read my newsletter from 2 weeks ago, just kind of talking about, is this fantasy land of achieving a soft landing and avoiding a recession, is this really going to be possible in terms of kind of where we are right now and what that would mean? And so again, inflation just kind of really continues to be a challenge and a sticking point for the Federal Reserve to contend to, which translates directly into market movements. Now, some positive news. So here's the S&P 500, just a technical chart here. And so we've seen some very bullish movements, very positive movements within the S&P 500. And so we can see here our 50-day moving averages, the blue line here, has very clearly crossed over the 200-day moving average. That is typically a bullish market sign for us to look at. The fact that down here we were able to initially violate support, withhold support, and then cross above that 50-day and then hold that support there. All very bullish, at least in the short term here for markets, that markets could have some additional room to run, some additional performance that we could absolutely expect to see as a result of seeing some of these technicals here. So these were encouraging signs, again, for the short term. Still talking about the fact that we have other issues to contend with in terms of just strictly technicals. These are all positive signs short term for the market, and investors should take heed of what these technicals are telling us. Here is another version, the NASDAQ, which is again that tech heavy index. And again, you can see very easily here where the 200-day moving average crossed over the 50-day moving average, and other than the slight area of where we decreased or we violated support, we were able to recover quite quickly, and so we're now well above both of those lines of support, giving the NASDAQ additional room to run in the short term again. And so bullish movements, encouraging when we look at kind of where we've been and kind of what we've seen. Once we now have some established support underneath of us, that is encouraging signs for us, at least for the short term. So these are things that as investors we need to just kind of take notice of and be thinking of in the backs of our minds as we look at our investments and make decisions. In terms of areas of strength in the market right now, international equities and commodities are in the 1 and 2 slots right now. Cash is in the number 3. Domestic equities, surprisingly enough, is in number 4. Now, there's some interesting movements that we've seen between international equities and commodities, but just to say this is kind of where we stand right now. Fixed income and currencies would be in the bottom 2. When we look at domestic equities, value actually continues to be an area of strength despite a lot of the movements that we saw early on in the year and the growth names. So mid-cap value, mid-cap blend, small-cap value, large-cap value, all of those kind of top areas of domestic equities. When we look at sectors, basic materials, now technology has really increased in strength since the beginning of the year. It's in a number 2 position for sectors, industrial and then consumer non-cyclical. And then financials, which had been in the top 3 for a long time, obviously after the banking crisis and taking that significant hit early on in the year, has not really been able to recover too much of its relative strength looking at other areas of the market. So this is strictly just saying, hey, who's been in every daily arm wrestle, who's been consistently winning and who's been consistently losing. That's kind of a way that you can take a look at this chart and interpret that. So I always think it's interesting to kind of go through where our winners and losers, where those trends have been. A lot of times this is where we can begin to see trends. And again, so it's going to be interesting. We're really waiting to see where this breakout's going to happen, because we see that mid-cap value, large cap value, small cap value continues to be leaders when we look at areas of domestic equities, despite the run that we've seen growth, particularly in the technology, the NASDAQ areas. So they're still kind of arm wrestling out who's going to be the winner. So there's kind of strength in both areas right now, which is interesting. So we're keeping an eye on that. So we thank you so much for joining us today. I hope that this was helpful. Again, I think that inflation is just going to be an area that investors, we need to be kind of, number one, keeping an eye on, understanding that the Federal Reserve is going to be making moves based upon these inflationary numbers that we get every month. Also making sure, though, that we understand that not every inflation marker is the same. They're not necessarily treated the same, so it's important for us to realize kind of what's involved with them and why some are more important to the economy than others. Otherwise, we thank you for joining us. We'll see you again next month. Have a great April. Thanks.